Hi there, Dean Heskin, President and CEO of Swiss American Trading Corporation. Thank you for tuning in to this, our most recent episode of our podcast, The Secret War on Cash, where today we actually are going to be taking a specific look at the secret war on cash as it pertains to our banking system. I have with me our frequent co-host, Chris Agelastos. Good morning to you, Chris. How are you?
I'm doing great. Survived another weekend, so that's a good thing.
Survived another weekend, and we actually just the Cinco de Mayo weekend and the Kentucky Derby. So a lot of stuff going on. Survival is always a good thing. You put that in the plus column. Well, speaking of survival, let's talk about our banks and the survival rate of our banks. This is something we've talked about quite a bit. I mean, the banks they've been battling, they've been struggling, not just in terms of overall solvency, but actually just even remaining open. And the article on your screen here, we're doing something today where we have two different sources that we're going to be using that are they are talking about the exact same thing, the exact same number. And as you see from the title there are 282 U.S. banks that remain at risk of closure. And that represents, roughly speaking, about 7% of the banks out there. The problem that many people are talking about or discussing now is that this is becoming somewhat of a financial epidemic, if you will. And as these banks start to fall, and even though they're highlighting, these 7 banks, I've seen the comparison or the analogy given, like it's going to be potentially something like dominoes ultimately, where as these start to fall, we could see a lot more banks that are going to be falling into or getting sucked into the same situation. So tell us about this, Chris, and what is it that, they're saying, are these banks 282? Do you think they're going to go under? Are they not going to go under? What really is happening here?
Yeah. Well, here's the challenge. It's really a systemic problem, and it's affecting a lot of especially the smaller, regional banks that are at higher risk here. We've got inflation and higher interest rates, causing problems for the banks because now it costs them more money to pay customers to borrow and also to borrow from the government. And generally speaking, right, you've got a lot of unhappy customers. Not many people are thrilled to discuss their bank anytime the topic comes up, right? It's even if it's operating okay in the background, people really aren't thrilled with them. There's less branches. The banks had paid for so many years so little interest that people just completely closed savings accounts and went to alternative means. So the banks really don't have a whole lot going for them. And, even though, like you said, it's 7% here that they're, mentioning are at a higher risk of failure, it very much is a domino effect, because once people start losing confidence in the banks, a handful of banks fail. We saw last year with just 3 or 4 banks that were a little bit more prominent that failed this time last spring. And as soon as investors lost confidence just from the first failure, then it sort of spiraled. Now they were able to sort of stop the bleeding a little bit, I suppose, but they didn't fix any of those issues. So, continuing on this year, I mean, we're likely going to see some other failures. And once that chain reaction starts, we don't really know how far it's going to go. That's kind of the scary part to me.
Sure. Well, and as I mentioned at the beginning or the opening here, the second article, it's talking about the exact same data, actually quoting the same sources, why hundreds of U.S. banks may be at risk of failure. And it gets into those things that you just mentioned, along with some other things, talking about, in fact, one of the main things that they kind of discuss is the stress that these banks are under. From all the things that we've been hearing so much about in the news with commercial real estate problems, losses due to high interest rates. I know they were talking as well about, the inflationary pressures that were created post-COVID and, all these different things. But the reason that I wanted to kind of highlight this one and get some perspective maybe from you on this is that one of the things that they talk about in here is how they're smaller banks. In fact, I'll quote, they say directly, it's no consequence if they're below the insured deposit limits, which are at $250,000.
Right.
And so really this article, even though it's addressing this CNBC article, what is happening with our banks and these banks that are, potentially going to close, it really kind of is downplaying a little bit. And as I read that, I'm like, well, this, like to your point just a moment ago, this is something that, it could create a systemic problem. And,
Right.
do you think that the FDIC is at a point in the banking system, is at a point where it can withstand, this stress and potentially these failures? Or is it something that, they're kind of missing the mark on this particular article where, things are going to be okay?
Yeah. Well, we know FDIC can't handle a large scale problem, or really any of even the major, banks, your B of A's, your Citibanks, et cetera. The way the system is designed, everybody, all the banks pay into these funds at the FDIC. And if a small bank here and there fails, there's a pool of money to be able to bail out those depositors. But in any sort of large scale problem, there just isn't enough funds available to make everybody whole. So that's really the scary part here. We know these banks already have low cash reserves. They're already, at high risk or higher risk of failure. And even in this article, they say that things should or could be okay as long as the Federal Reserve and the White House step in to fix these problems. Well, I don't know how confident you are or our viewers are in the Federal Reserve and the White House making the right decisions here, but I'm a little concerned about it. I'm not so sure that they will move the ball down the court and fix some of these issues. So it's definitely something people need to be concerned about. And I know, when I first was looking at some of this, you hear, okay, 7% of the banks, mostly the smaller and regional banks. Well, that really isn't a problem for you until it's your bank. And
Sure.
and I have some larger bank accounts, but also bank with some smaller, a smaller credit union, just to have money in different places. I've talked about that before. But again, as long as it's somebody else's bank, I'm not too concerned. As soon as it happens to mine, big problems. And so that's really what people have to think about is, how comfortable are they with their current plan? Are they diversified? Do they have access to funds in other areas? Whether it be alternative banks, cash, precious metals, just having money somewhere else, not having all your eggs in one basket, like we've talked about a million times. These are things that you
Sure.
need to do to protect yourself and hope you never need it.
Right. Well, you touch on a very excellent point there, Chris, that, we've seen banks fail up until now. We've got this list now of others that, or this number of nearly 300 banks that potentially could. But the point that you brought up that I think is really a good one is that, what is the government of the Fed doing to correct or improve this situation? I mean,
Yeah.
really the oversight only, seemingly anyways, is they're coming in and just giving a grade or a report card saying, okay, this bank is in trouble or not in trouble, and then it's either closing or
Yeah.
not closing type thing. But there's really nothing that we can really sink our teeth into that's something to be encouraged by, that okay, they're actually doing something good,
Right.
we're actually making some progress here. And that's why I think, again, going back to that dominoes analogy, that as they start to go, that's where a lot of this potential big problem will come from. Is it's going to just all fall into a vacuum, and we could be
Right.
looking at our whole banking system being not only under stress, but literally could collapse if things continue the way they're going. So it would seem.
Right.
Well, Chris, we thank you for that, and I'm
Yep.
pretty confident that the banking system and the news about our banking system is going to have plenty enough content that we can cover this more later. Hopefully, we have this nearly 300 banks out there that are able to right the wrong and get themselves back to a point of solvency and stability. But there's a lot of things that we hope and wish for that mathematically sometimes just may not be possible. So
Yeah.
for those of you tuning in, thank you for doing so. If you haven't contacted our office to receive some of our information, please do so. You can call it toll free 1-800-289-2646, or please visit us online at swissamerica.com. That's SWISS America, all one word, .com. If you've not subscribed to this podcast, please do so. We'd love to stay in contact with you. And if you haven't followed us on social media, please do that as well. Thanks again, Chris. Until next time, we'll see you then.
All right. Take care.